thank you to those of you that have joined us today. I'm excited that we're able to offer this informational webinar on a topic that I think is so important for home buyers, homeowners, prospective homeowners, and even people that don't own a home. It's life insurance. So I'm delighted that I get to spend some time today, and you get to spend some time today with Eli'El Bueno. I would love to know, what are some of the myths or the common myths about life insurance?
Well, there's a few, and I'm just going to mention two. One of this is that it costs too much, and that's actually a huge myth because life insurance is really not that expensive. And the second myth, it's one of my favorites, is you can only use it if you pass away, or you can only benefit from it if you die, which is another myth. So just getting into the whole fact of you can only use it when you pass away, that's a huge myth because there are policies designed, and they're called living benefits that you can use while you're alive. And some of those living benefits are if you get sick, if you can't work, you can actually use the policy to pay for certain medical expenses, or even go on a vacation. So it's not only when you die, you can also use it when you're alive as well too.
That's interesting. And how, to give a general overview, how does that work where someone can use that? Is it a different type of policy, or can you explain like how they can use it?
Absolutely. For example, if you take out a whole life policy, let's say you take out $150,000 of a whole life policy, and this policy does have living benefits in it. Some of those benefits are, for example, if you have a chronic illness or something critical, let's say a third-degree burn, heart attack, stroke, aneurysm, end-stage renal disease, things that even severe bronchitis, and you can't work, you can actually request the carrier to advance a portion of the death benefit to cover certain, let's say, medical expenses that you can't pay for. So you can use that while you're alive as well too. And also with the cash value, if you do have a cash value policy, you can actually access those funds to go on vacation, do home repairs, catch up on some bills and things like that of that nature.
So we're not just talking about morbid stuff. I'm teasing.
Exactly.
What do you think
Exactly.
gets in the way of people getting life insurance? Like, what are there some stumbling blocks, or do people do they overthink things, or do they put it off? Like, what do you find gets in people's way?
I think two things that may get in people's way is that they may think they're too sick to afford life insurance or to get life insurance. And sometimes there are carriers that will work with you. Even if you do have a condition, they will work with you. And also the cost. Sometimes some people may think that it's too expensive, or maybe they're up in age and they can't afford it. And that may be a huge stumbling block for some people. But the best thing somebody can do is talk to an agent that's licensed and just go over your options, and they'll be able to help out as well too. So don't let that fear hold you back.
I like that. Yeah. Besides health, are there other factors? Does age make a difference?
Absolutely. The younger you are and the healthier you are, the less expensive life insurance is, even with whole life. And unfortunately, the older we get, it gets a little bit more pricier. It's like car insurance. When you're younger, it's more expensive because you don't have a lot of experience. But when you're older, it's much cheaper. And with life insurance, it's kind of like reverse. When you're younger, it's cheaper because you have a longer life. And when you're older, it tends to be a little bit more pricier because there's a shorter lifespan. So sometimes it's not fair, but there are carriers that have really good rates for people that are up in age. So it's just a matter of talking to the agent and just going over your options.
And now what happens if someone has life insurance through their employer? Is that something that is beneficial to speak to somebody like you, or how does that work?
Absolutely is very beneficial because, for example, if you retire, or let's say that you decide to move on to another company, or let's say that you get laid off, the policy may not go with you. So let's say that you're in a company for 20 years, you're a lot older, for example, there may be some health concerns. So having an extra policy that's not work related can have a huge benefit to you. For example, a an employer may have a policy on you, maybe like a $10,000 policy. It may be free, or maybe you have a policy that's 50,000 and you're paying $3 a week. It's not that bad, but when it comes to protecting your family, it's always good to have something additional.
How do you determine like what someone needs? Like, for instance, if they should have 100,000 or 500,000 or a million, like what are the contributing factors or maybe some of the questions that you ask?
That's done by means of a fact finding. So when I sit with someone, we go over everything that their whole life, pretty much. If they have a mortgage, if they have any credit card debt, if they're thinking about funding their children's education, those are factors. So when I sit down with someone and let's say that they have a mortgage of 300,000, for example, right? They have a couple of car notes. Well, you may need a term policy that has a higher face amount. So if something were to happen to you, at least those things are covered and you don't leave your family with that burden. So a fact finder comes into play when it comes to determining how much someone needs for life insurance.
And how do you make a decision, or is it really up to what the person feels is best for them of if they should do term or whole, or you used a term before of hybrid? Like, is that a mixture of the two?
Absolutely. At the end of the day, Suzanne, it all depends on what the person's needs and their goals. It's not up to me because everyone knows what they really need. So my job is to just provide the education, find out what they have, what they're looking for, then I tailor it to what they're looking for. So a hybrid policy is a combination of a term and also a whole life policy. Like, for example, let's say someone, because our needs change as time goes by, so let's say somebody says, you know what, I want a policy for 20 years for 500,000 and I want an extra policy for a whole life of 50,000. So let's say that you outlive the term policy, at least you have a whole life policy that continues for the rest of your life. So you're not looking at like a huge bump in the road when 20 years later you don't know where your health is going to be, how you're going to be financially. So having something like that and talking to an agent about what your goals are and your needs are is really, really beneficial. For example, someone that has a business, um, a term policy may be the best option for them because if they're going to retire, well off financially, they're saying, I just need a policy for 20 years or 30 years because I'm going to be well off and I'm not going to need it. So that fact finder, when we sit down and we discuss all the pros and the cons, that's when the puzzle starts, being put together as to exactly what that person needs or that family needs.
Is there ever a point where it's too late for someone to get it?
After 85.
Okay.
After 85. That's like 85 is like the cutoff year. At 80, there may be a carrier or two that may offer something up until you're 90 years old, but sometimes those premiums tend to be really expensive when you're looking for something at 85 or 86 years old, like really high premiums. So when you're younger and healthier, it's the best time to get life insurance.
Is there a range of, is it something where it's, I don't know, 100 a month or under 100 a month or hundreds of dollars a month or thousands a month? Like it just to give anyone who's catching this, whether it be now or whether it be on a replay, just a general sense?
Absolutely. There are policies that you can get for under $20 a month.
Oh, wow.
And it's just amazing. And sometimes, clients are like, oh my God, this is like really amazing. Term, it tends to be a little bit on the more affordable side because it expires. And so you'll see like super low rates. But when it comes to whole life, the premiums are a little bit more higher in price. But if you're younger and healthier, it's very, very affordable. Like, for example, you can have a whole life policy. Let's say you get one for 250,000 and the premium is, let's say, $90 a month. If you put it off too long, that same $90 a month could be $290 a month. So that's why it's important to, and again, I got to keep saying this, when you're young and you're healthier, to consider a whole life policy so that way you don't have to worry about life insurance later when the premiums are way too high for someone to afford per month.
I know you mentioned about 85 somewhat being that cutoff, but does the pricing also change based on your decade, right? If you're in your 20s versus your 30s, like if somebody's 49, are they better to look at it at 49 or would they be okay at 50? Do you see what I mean in that regard?
Better at 49. I mean,
Okay.
the difference in premium is probably like just a few dollars, but
Okay.
it's better. I mean, don't get me wrong, Suzanne. In 1 year, someone's life can completely change. You could be healthy one day, and next thing you know. So me personally, I wouldn't put it off one more year if I know that I can get something affordable today, because things can change drastically in someone's life.
What are mistakes that you found that people make in getting life insurance?
Not being truthful on the application. It's good to be truthful. Uh, if you have the carriers will check your medical record. So if you withhold something or willfully, it may pop up, and that may either change the rate or they may decline you. So I've seen that a lot. So it's good to be truthful on the application, so that way there are no surprises during the underwriting process.
What are some of the questions that are asked?
Oh, uh, HIV, AIDS, cancer, heart attack, stroke. There are carriers that they don't ask medical questions. There are some that don't. They just don't care. They'll just insure you. But traditionally, some carriers do want to know, because if you think about it, they're going to be, for example, you can purchase a $500,000 policy today, make three payments, and if you pass away, that carrier is obligated to pay the 500,000 to the beneficiary. So that's the risk that they take. So they want to make sure that the policy it's worth it. It's worth it pretty much. So that's why I always tell people to be truthful in the application. Don't withhold anything, because they are taking a risk on your life to make sure that your family's taken care of if something were to happen to you.
Do you have any control or any ability to, if someone's denied, call the insurance underwriter and maybe present a case, or is a no a no?
Yes, absolutely. Sometimes there are times where I can call up the carrier and say, "Hey, what happened here?" And they may consider it all over again, because mistakes do happen on the medical side. Sometimes there was one case where a doctor had put the wrong information on someone's medical record, and she's like, "I'm fine," and so that was corrected. So mistakes happen. So if something like that were to happen, I can call up the carrier and find out what's going on and hopefully correct it if something did go wrong.
Do you ever make suggestions on, if somebody says to you, Eli, I should take 25,000, but you realize they owe 500,000 on their mortgage, and they're driving the beautiful cars, and they have their spouse works part-time. Like, do you ever?
I do make recommendations. Sometimes making those, again, it's only a recommendation based on what they tell me. So I work with families and individuals and business owners, so that way we can come up to a common ground. Because at the end of the day, it's what they're looking for and what they need. Because there are things that people don't want to say, and it's okay. I respect that about their lifestyle. So if they say I need this, then I may recommend something, but if that's what they really need, then I respect their wishes.
For those that are on now, what's the best way to reach out to you?
Well, they can email me, or they can also call me. I have a toll-free number, 855-914-3210. And if they dial extension 1, they'll get me directly, or they can email me at info@ifgllc.us. And I can answer any questions that they have. I'm licensed in 9 states, so I'm not only limited to Rhode Island. I can also help people in other states as well too.
Eli, thank you so much. This has been so informative.